You can unplug the machines, lock the doors, and walk away. But in the eyes of the Australian government, your business is still fully operational. To permanently close a business in Australia, you have to sever the legal ties, settle outstanding debts, and shut down your tax registrations. Doing this correctly prevents unexpected liabilities from surfacing years after you stop trading. The exact steps you need to take depend entirely on one factor: your legal business structure. If you operate as a sole trader or a partnership, you and your business are legally tied together. Your primary tasks are to finalize your accounts, divide any assets if you have a partner, and cancel your ABN and tax registrations. This logic tree shows the divide. Sole traders directly cancel their ABN, but a proprietary limited company is a separate legal entity. To close it, you either sell its assets and shares or undergo strict ASIC deregistration. Correctly identifying your structure and following its specific pathway ensures that company debts do not become your personal financial burden. Step 1 in this process is defining how you want to exit. You need to decide if you are ceasing operations entirely and selling off individual assets, or if you are selling the business as an ongoing concern to a new owner. This visual calendar charts the specific sequence of your closure. You cannot do everything at once. You must map out exact dates to stop taking new orders, fulfill existing customer commitments, terminate your supplier contracts, run your final payroll, and finally cancel your registrations. Failing to communicate these dates creates operational chaos. You need to notify your employees, major customers, suppliers, and landlords early so they can prepare for the handover. The most heavily regulated part of this timeline is how you handle your employees. Ending employment requires strict compliance with the Fair Work Act and your specific industry awards. If your business has fewer than 15 employees, you generally fall under the small business exemption. This means you are typically exempt from paying statutory redundancy pay, though you still must provide proper written notice. For every employee, you must calculate a final payout. This calculation has to include their final wages, any unused annual leave, and where applicable, accrued long service leave. By calculating these final figures accurately and documenting every payout in writing, you eliminate the grounds for future employment disputes and fair work litigation. With your staff taken care of, you turn to your accounts. You need to chase down all outstanding invoices from your clients and negotiate final payment settlements with your creditors. This warning graphic highlights a common trap: the Australian Consumer Law, or ACL. Under the ACL, consumer guarantees on the goods or services you previously sold continue to apply even after you stop trading. You must establish a clear pathway for customers to claim refunds or warranties during your wind-down period. You also have to follow strict rules regarding how you advertise your closure. Any clearance sales must be completely accurate regarding your stock levels and final dates. Misleading statements can trigger regulatory fines. Next, you must address the physical footprint of your business by exiting your commercial property lease. This checklist details the 4 pillars of a lease surrender agreement. Because commercial leases usually continue past your closure date, you need a negotiated agreement that explicitly locks in a handover date, determines the treatment of your security bond, defines your make-good obligations to restore the property, and sets any final settlement sum. You will also need to sell off your remaining physical assets, like stock and equipment, and formally assign your intellectual property, like trademarks and customer databases, to your buyers in writing. Before you transfer any physical assets, you must check the Personal Property Securities Register, or PPSR. The PPSR is a national online notice board showing whether someone is claiming a financial interest against your goods. Clearing these interests ensures your buyer gets a clean legal title. By proactively neutralizing your property leases and managing your consumer warranties, you stop hidden liabilities from accruing and threatening your personal finances. Once your trading has completely stopped and all your liabilities are paid, you reach the trigger point for government cancellations. You must cancel your ABN, goods and services tax, and pay-as-you-go withholding. This checklist details the strict criteria a company must meet for voluntary ASIC deregistration. You can only apply if the company's assets are worth less than $1,000, there are 0 outstanding liabilities, all members agree to the deregistration, and there are no legal proceedings underway. If your company owes money it cannot pay, you cannot simply deregister it. Directors who ignore unpayable debts and continue to trade face severe personal legal risks for insolvent trading. When a company fails the deregistration criteria due to insolvency, you must promptly seek professional external administration to manage the remaining debts. Even after the entity is dissolved, you still hold one final asset: historical data. This includes human resources files, tax documents, and customer records. The Privacy Act requires you to retain specific tax and employment records for mandated periods, typically up to 7 years. You need a secure storage plan to keep what is legally required and destroy what you no longer need. True legal closure happens only when the corporate entity is formally deregistered and its historical data is safely quarantined. This eliminates the target for future lawsuits or data breaches. When you complete these steps, you reach a clear end state. Your debts are settled, your staff are fully compensated, and legal entities are properly dissolved. Even with the doors closed, you have a few final tax obligations to clear. You must lodge your final business activity statements, or BAS, and account for any capital gains tax, or CGT, triggered by the sale of your business assets. If you face any signs of insolvency, or if you encounter complex lease disputes, securing independent legal or accounting advice is mandatory to protect yourself. An orderly, legally compliant business closure is a structured transition. By following this roadmap, you actively protect your personal assets and secure your financial future for whatever comes next.